So in layman's terms, you help people who want to buy a business, and those who want to sell a business, you help them to sell a business. Is there an average size of business that you work with?
Yeah, so the industry would classify Watermark as working with the lower middle market. And that sounds derogatory, but basically that is helping companies on the sell side that are typically revenues up to 50 million. And then on the low end, typically are maybe a little south of 10 million, that range. So typically 10 to 50 million revenues. And then on the buy side, the clients are typically revenues 70 million to 500 million, but they're looking to do a deal that is acquire a company that's typically around 10 to 50 million. Revenues.
So valuations of companies, that's the nicest thing. What's a dollar earned worth if another company buys it? So smaller companies, due to maybe higher fixed expenses, maybe you can tell me why is that? If I earn $5 million as a small business or $2 million, and when I want to sell it, what's my multiple of my earnings? And then if I'm a larger company and I want to buy it, then why would I want to buy a smaller company? What does that do to my profits or to my shareholders or to my stakeholders?
So you always, as a buyer, you always want to think about return on investment. And the return on investment, you look at that in hindsight after the acquisition is made, and you want to make sure that your return on investment is greater than what we call in the industry a hurdle rate, or the cost of doing the deal. Multiples they vary per industry. I have some data here that's current data on different industries, whether you're a manufacturer. Manufacturers in 2022 sold for an EBITDA of 7.4 times. However, if you're in the technology, media and telecom space, for example, companies in that space in 2022 sold for 9.1 times EBITDA. And then as you move up in size, so companies where the enterprise value or purchase price, interchangeable, is 10 to 25 million. All industries in 2022, those multiples were 6.2 times. But for companies that were 100 to 250 million, they sold for an average of 9.2 times. So as the company gets larger, the multiple gets larger.
So if I have a company that makes $1 million a year and I sell it for $3 or $4 million, and another company who buys me makes $25 million a year, them just by buying me, they already double their money, right?
Well, yeah, that's a trick to the trade. Is once that acquirer acquires your cash flows, if you sold for a 3 to 4 times multiple, and the buyer, much larger, 25 million, has a EBITDA multiple of say 6 or 7, that's an immediate valuation kick to the buyer at day one, and that's why infrequent acquirers, surprisingly or not surprisingly, miss that understanding. Private equity has mastered that, and that's why private equity will often pay a premium, because they realize at day one there's immediate financial synergy value to making that acquisition.
So in that illustration, you make 50 to 100% the day you close the transaction.
You could.
It's possible, right?
Yeah.